Well, hello, I'm Rebecca McLean, and welcome to Women of Color Money and Legacy, where I talk money matters. I share strategies to empower us to become financially literate in terms of managing our money wisely, building generational wealth, financial freedom, and creating a lasting legacy. Now, it is a journey of learning and growing together. I'd like to give a shout out to all of my new subscribers. As always, I am so delighted to have you a part of this community. And I hope all of you had a happy Thanksgiving celebrating with your family and loved ones. I certainly did. In fact, this is my favorite time of the year, from Thanksgiving to the new year. And are you guys like me, where it feels like the holiday season just comes so quickly? It's like in the blink of an eye, it's Christmas again. But I just love this time of the year. Okay, so let's get started. Now today I'm going to talk to you about cryptocurrency because it's really been making the headlines for the past couple of weeks with the collapse of FTX and its subsequent bankruptcy filing. And if you're not up to speed, let me just share what transpired and how it should be a warning to all of us to protect our assets on these brokerage exchanges, particularly cryptocurrency. Now, FTX is a cryptocurrency exchange. It's based in the Bahamas, and it was the third largest crypto exchange in terms of volume, with over 1 million users before it filed Chapter 11 bankruptcy a couple of weeks ago. Now, it was founded in 2019 by Sam Bankman-Fried and Gary Wang. Now, Bankman-Fried was also the CEO of the company. I mean, the collapse was fast and furious. And the reason being is that investors became alerted to Bankman-Fried's shenanigans after an article was published by Citicorp. That was called CoinDesk. That's the name of the company. It was published by CoinDesk that revealed that FTX was funneling billions of dollars into his own hedge fund company called Alameda Research. Now, Alameda Research was in turn investing money into FTX's own token coin, which is called FTT. And when the public got wind of this, the investors started withdrawing their money in droves. And this turn of events happened so quickly that FTX could not cover all the withdrawal demands, which in turn led to the whole house of cards come tumbling down. And when the bankruptcy was filed, Bankman-Fried had to go as well. So he resigned from the company. Now, his net worth was reported to be around $26 billion earlier this year. He lost 95% of his wealth in just one day. It reminds me of Kanye West losing $1.5 billion in one day after he made that anti-Semitic comment. But Bankman-Fried was worth a whole lot more than Kanye. Now, he's only 30 years old, and he was regarded by many as the poster child when it comes to crypto. He was extremely smart IQ-wise, but greed and fraud was what brought him down. And listen to this. He donated $70 million to the Democratic Party midterm election campaigns. He spent $300 million on real estate for himself and his senior staff. And he invested $10 billion to prop up Alameda Research. And when he tumbled, he brought a lot of people down with him. You had big names like Tom Brady, Steph Curry, Shaquille O'Neal, Naomi Osaka, and many others heavily invested in FTX platform who reportedly lost millions of dollars and who also find themselves in a lawsuit along with FTX. And I'm sure that Bankman-Fried will have his day in court just like Barney Madoff. So we'll just have to wait and see how that plays out. Now, the crypto market was impacted to some extent over the past couple of weeks with some downward pressure, but not significantly. Now, crypto has been in bear market or bear winter for the better part of the year anyway. And the collapse of FTX is not going to doom the entire crypto market. It suffered one casualty so far, and as major player as FTX was, I'm confident that the crypto market will rebound, thrive, and make us a lot of money. Now, thank God I did not use the FTX platform to invest in crypto. That's one headache that I definitely did not need. And if you use the FTX platform and lost money, my heart goes out to you. I hope that you recover some, if not all, of your investment. Now, I've only used Coinbase when investing in crypto, but regardless of what platform you use, there are some warning signs and precautions that you'll want to be aware of going forward. One of those precautions is to understand that the cryptocurrency market is not regulated. I mean, it is the wild, wild west out there, y'all. So understand that it's unlike the stock market, which is regulated by the Securities and Exchange Commission and Commodity Futures Trading Commissions. There are no such mandates when it comes to crypto market. We're just trusting these exchanges with our money and expecting them to properly manage our assets. All we have is a contract with the exchange. And I definitely feel that there should be some regulation. And there's been a lot of talk about this in the past. And I'm sure that this particular collapse might have just sped things up. And I certainly hope so. Now, that being said, you and I have to do our own due diligence when it comes to investing our hard-earned money on these exchanges. And the reason that I chose Coinbase is because it is a publicly traded company. And public companies must mandatorily report standards regulated by the government. And they must file reports with the SEC on an ongoing basis. And the SEC has stringent reporting guidelines for public companies. And I also looked into who's running these exchanges. What is the background and qualification of these young whippersnapper billionaires? You have to check them out. And I also have a wallet on the Coinbase exchange. And although this doesn't guarantee anything, it does give me some peace of mind.
Do you find this video interesting so far? Please don't forget to subscribe to the channel.
Another precaution you should take is to diversify. Don't put all of your eggs in one basket. If I were you, I definitely would not invest more than 20% of my portfolio into crypto. If this FTS collapse didn't teach you anything else, you should have learned not to invest all of your money in crypto. And a lot of overzealous people, especially young people, dump all of their money into the crypto market. That is a big mistake. You don't want to invest all of your money into one stock or crypto. You want to diversify your portfolio with a mix of both, but you want to be top heavy with stocks, not crypto. I don't invest all of my money in one company, one coin, or brokerage platform. Now, if you're new to investing, you might decide that you want to start by investing in one coin, and that's fine. But don't go all in at one time. I would encourage you to only invest in stable coins. There are over 12,000 coins out there, and most of them are not going to make it through the bear market crash. 90% of them are going to go away. They're not going to be around. I urge you to proceed with caution when it comes to meme or hype coins such as Doge, Shiba Inu, and Big Eyes. You want to invest in stable coins like Bitcoin, Ethereum, Polygon, Cardano, just to name a few, because they're going to be around when the shakeout is over. Now, Cathie Wood, the very popular founder of ARK Investments, which if you're into investments, you know exactly who she is. Now, she recently predicted that she believes that one Bitcoin will be worth $1 million by 2030. One coin. Now, I don't know if it will or not, but I will say that Bitcoin is a safe bet. Another thing that you want to steer clear of is bandwagon investing. Don't invest your money into a cryptocurrency or exchange just because a celebrity or an influential person is endorsing it. Celebrities get paid for endorsements. In fact, just last month in October, Kim Kardashian agreed to settle charges brought against her by the SEC in the amount of $1.2 million for endorsing the crypto token called EMAX or EMAX. And she was paid $250 for the endorsement to endorse it on her Instagram account. Now, she was penalized because she failed to disclose that she was paid that $250 to publish that endorsement. So let that be a reminder that just because a celebrity or a high-profile person endorses an investment opportunity, including crypto, it doesn't mean that those investments are right for you specifically. You have to consider your own risk potential. You can't just follow the crowd. And I will tell you, when I first began investing, I got some bad investment advice from someone I thought was an expert investor. Now, he had over 300,000 followers, so I said, well, he must know what he's doing. And there were some things that he did right. But after a while, I began to realize that this person wasn't really giving investing advice. He was gambling. And unfortunately, I got stuck with some real lemons. So some of the information I share with you is from my own experience of losing and learning how to evaluate securities on my own to get the best outcomes. So we'll just have to wait and see how everything pans out with FTX. They have appointed a new CEO to come in and clean up the mess that Bankman-Fried created. And he'll have his hands full trying to rebuild trust. And I definitely wish him well. But I just wanted to come on here and just briefly talk to you today and address this FTX collapse, address some concerns many people have regarding the future of crypto in general, and just stress that you be careful investing in crypto because you don't want to get burned. Make sure that you have an investment strategy and not just be out there willy-nilly when it comes to investing, whether in the stock market or the crypto market. We want to make wise money decisions with less risk as possible. And that's going to wrap up all that I want to share with you today. I do want to thank you for tuning in, and I'll be back with another Women of Color Money and Legacy video next week. And please don't forget to like, share, comment, and subscribe to the channel. Click that notification bell to receive an alert each time I upload a new video. Take care and bye for now.